Alright, Varinder, thanks for that. Yes, we have about 10 more minutes of trade, so let's get two more guests into our conversation. We have Mayuresh Joshi of Angel Broking and Ambrish Baliga who joins in as well. Gentlemen, afternoon to both of you. Unfortunately, not a very good afternoon of trade. But Mayuresh, I wanted to come to you on a lot of these mid-cap names that are falling. You know, names like Strides, Motherson, Shriram Transport, Sun TV. Any of these names that you advise getting into now, or as Sudarshan was pointing out, it's better to just stay away from mid-caps for the time being?
Afternoon, Sonia. I think after the clear carnage that you're probably witnessing on the mid-cap index, I think it's a better prudent policy to, I think, wait and watch. And clearly, I think of all the names mentioned, everybody had some amount of issues. So, for example, if I talk about Motherson Sumi, the domestic operations because of copper costs, currency fluctuations, then international operations because of ramp-up expected in products and plants, and what the US markets will do specifically as a front end in terms of how their production facilities will go live from there. I think those are a few points to be watched out for. So clearly, I think from the mid-cap universe, I think a wait and watch is what I feel is more appropriate at this point of time. Let the market stabilize. I think there's too much of uncertainty, specifically surrounding the mid-cap stocks at this point of time.
Okay, Amrish, good afternoon. The stock that's really broken the back of the market has been ICICI Bank, now down 34%. In this correction. I don't recall when was the last time we had a 34% correction in ICICI Bank. Is the risk reward now favoring some of these private banks, or do you think the market is sensing something ugly?
Favoring some of the private sector banks, but may not be ICICI Bank, again, on which we had discussed, I think, last couple of weeks back, and I said that this is one of the weaker large private sector banks and should be ignored. I think it can fall much more. So that's exactly what has happened. But at this point of time, I would surely look at buying into HDFC Bank, Kotak to a certain extent.
Okay, so HDFC Bank and Kotak are a couple of buys. Would you touch anything in the pharmaceutical space, Ambrish? Because we are seeing a fair amount of correction. So, for example, Glenmark fell 15% last week. Anything in the pharma names that look attractive now?
Pharma names, I think the only three stocks which I have in the portfolio I will continue buying at lower levels is Lupin, Sun Pharma and Dr. Reddy's. And other than that, I think the other stocks I'll just stay out for the time being, because I think this carnage is going to continue for a while longer. So I think it's best wait and watch and just stick to the leaders.
Just stick to the leaders. Sudarshan, a word on TVS Motor, that's down 4%, but it showed some signs of life, but it looks like the correction is continuing now.
Oh yeah, I think TVS has much more downside. Let me quickly summarize what I have been talking about for 20 days. This market is going down. A large bearish pattern was confirmed about 15-20 days ago, giving a target of 6,800. So the view is not very clear on the downside. Sometimes during intraday trades, it is wise not to take a trade because you do not know when to enter and how to put a stop loss.
Would you hold that view for individual shorting ideas as well? And any 2 or 3 stocks that are good shorting candidates now?
Yeah, I would hold that view because most stocks are now in clear, well-defined patterns that tell us lower levels are coming. Intraday trading is not sometimes as easy as it sounds. Where do you sell? Where do you put a stop? What happens if a 1 hour surge takes you out? So these are different issues, but the mid-caps that you were just talking about, Sonia, all of them, so for example, Apollo Hospital, Motherson Sumi, which is just confirming a pattern on the downside, Bajaj Finserv just making a bearish head and shoulder, Eicher Motors now finally breaking down, all of them are short selling ideas, but they are not intraday.
Okay. Mayuresh, a word on Eicher Motors, which is now corrected 20%. It's been a swift correction. Do you expect this to be bought into, or because of the kind of valuations and the kind of rally that it has had, is there risk for further downside?
So again, Anuj, I think another 8-10% cut on Eicher Motors is probably not ruled out, seeing how the markets are moving in. But clearly, I think the consolidated performance has been extremely good. So even if you take the commercial vehicle segment for Eicher Motors, the EBITDA margin did surprise us. And even on the Royal Enfield business, the number of dealers that they're adding or expected to add over the next 2 years, the capacity expansion that they've done, that will hold them in good stead, because I think the waiting period should stabilize and in fact start coming down over the next few months. Having said that, clearly I think the realizations have been extremely good for oil and feed, and clearly even on the CV side, discounting per vehicle with the expected latent demand to probably come through on the MHCV side, I think that should have some amount of incremental effect on the EBITDA margins on a consolidated basis. So clearly, I think we were waiting for corrections on Eicher Motors. I think this has given an opportunity to at least start nibbling a part of your money, probably within the auto and ancillary space, and Eicher is something that we like. So any decline onto this stock from the current level, I think part accumulations can be initiated by long-term investors.
Alright, so look at Eicher Motors from a longer term perspective. What about a stock like Ashok Leyland, Mayuresh? Because that one as well, although it's corrected, it's still up 60% this year and given very good returns. What do you do if you own that stock, and what do you do if you don't?
So clearly, Sonia, I think the outperformance, as you mentioned, has been quite stupendous for Ashok Leyland. And clearly, if you look at the volume growth that is happening, yes, I think there has been significant amount of pre-buying with new regulatory norms coming through. But clearly, I think the volumes have held up for Ashok Leyland, and our own take is that the MHCV side should hold up for Ashok Leyland. The market share has been inching up slowly and steadily, and though I think the LCV segment has been a laggard, over the next few quarters, I think if the latent demand picks up, as one really expects on both these segments, Ashok Leyland can be a clear beneficiary. With falling diesel prices, I think the fleet operator profitability also goes up, and our own take is that EBITDA margin should hold up between that 10.5-11% range for Ashok Leyland. So long-term investors holding on to the stock, probably I think hold on to Ashok Leyland. I think we still have an accumulative rating on the stock. For investors who want to get in, I think wait for declines. I think another 3-4% correction shall be a good entry point for Ashok Leyland.
Okay, Sudarshan, you did recommend Ashok Leyland at the start of the show. It's very close to that stop loss price that you mentioned. But regardless of that, would you still advise fresh buy on Ashok Leyland at the current correction for a positional trader?
Absolutely not. We were talking about day trades today and tomorrow. That's all. And the whole idea for stop loss is, in this market, you listen to the stop loss before you do anything else. And that was the purpose. That if it doesn't work out, we get stopped out. If the markets find stability, Ashok Leyland should be one of the first stocks to go up.
No, fair point, Sudarshan. The point taken. I'm not debating that. What I'm saying is that are the charts of Ashok Leyland also at the risk of getting damaged because of the kind of fall that we have seen today?
No, they are not. See, all stocks will go down. That's a different issue. But the charts are much better than the other stocks we have discussed. But where the markets are falling much more than the charts, because everything goes down, it's a matter of relative outperformance or underperformance. Only the best stocks should be bought into with the full knowledge that they can go down further. Ashok Leyland, however good it is not in that category.
Alright, well, we're counting down to close, so let's do one thing and take you through how the markets have performed today. It's been a very disappointing session of trade. The Sensex is down more than 320 points, and the Nifty is down more than a century, and this is on the back of a 4% loss that we saw last week. So there are incremental losses. However, the volumes are not too high at all. Cash market volumes just about 11,000 crores. So let's see what we get in terms of FI numbers tomorrow. Private sector banks got hit the hardest today. So Axis Bank and ICICI Bank are both down. IndusInd Bank as well has fallen about 3% or so. Now ICICI Bank is down 30% this year. That's the kind of damage that stock has seen. Apart from that pocket, the pharmaceutical names got hit hard. So Dr. Reddy's, Lupin, you had Sun Pharma that was in the red the last time I checked as well. That goes home with a 2.5% loss. So that's a space to be slightly worried about. Some of these steep valuation stocks are getting hit. NMDC was one of your big losers as well, down about 4.5% or so. But on the upside, you had names like Tech Mahindra, Yes Bank and HDFC that did well. Very few and far between. But today it's been all about the crunching blows that we got, Anuj, in the mid-cap space in some of these quality names.
Indeed, Sonia. And in the first hour of trade, first 3 hours of trade, it was classical distribution. The Sensex and Nifty were somehow being kept afloat by a couple of stocks like HDFC and a couple of others, while the pain was in the mid-caps. You could sense it, that really it's a bit of a game being played out right now. And that is how it is. I mean, take a look at the mid-cap index. It's ending with 2% losses. Through the day it was weak, but now we're seeing more cuts. And look at the Bank Nifty, that's down 2.5%. I'll just quickly take you through the big losers in the F&O market today. Leave out an MTech Auto, that really is a different stock altogether. But take a look at the biggest of losers today. Strides Arcolab, Wockhardt, JSW Energy, Shriram Transport Finance, Bharat Forge, Motherson Sumi. And I can tell you, buy and hold, and having a long-term horizon is all right. But I can tell you, a lot of quality investors will be worried about the kind of fall that they're seeing in the portfolio right now, because these are the kind of stocks that you'll find in a lot of portfolios, and they are seeing big cracks right now. So stocks like Sun TV, you've seen Bosch, TVS Motor, Ajanta Pharma, Crompton Greaves, all these stocks falling quite a bit. Let's talk about some of the winners as well today. Curiously, there were 3 or 4 big winners as well today. PTC was one of the big winners, up 3.5% in trade. Reliance Capital was up about 2.5%, so that stock managed to hold out. South Indian Bank was up about close to 2%, so there were some winners as well in today's trade as we count down towards the end of the trade. And just a couple of more winners before we wrap up trading action. One was Hathway Cable, that stock was up close to 4%. The other was Financial Technologies. That was interesting because that stock gained about 10% in a market like this, and of course sugar stocks also rallied in trade today. So all in all, I have to say that a weak day for trade, but just one more word, volumes today were extremely low, about only 11,700 crores. Yeah. So today, when you see the FI number, you'll see gross number, buyers and sell put together of 5,500 crores, not more than that. That's little solace to someone who's seen stock prices erode, but this is telling you that this is now getting more and more technical in nature rather than anything else.
So we haven't seen any real rebound technically in the last couple of days. Also last week it sold off, today it's sold off. I mean, we're not even getting a bounce to sell into. Does that tell you that the texture of the market is completely broken down?
It has, Sonia. For last many days we've been saying that is this a bit of a near-term bear market? It is. I mean, the bank Nifty is down 25% from peak. The Nifty is down 16 or 17% from the peak. You have 30 Nifty stocks, more than 30 Nifty stocks, which are now under the classical definition of bear market, which has fallen more than 20%. So 60% of your market is in that category. Nifty junior stocks are getting there. So you can deny, you can be in a state of denial, but the fact is that screen prices are telling you that the market is going through a bit of a bear phase. You may want to call it a bull market correction, but at the end of the day, the market has made 52-week lows now on 3 days running. When the Nifty makes 52-week lows, that's a bear market. You just can't deny it, and that we are going through a bear market right now.
Oh yes, that's what the ticker, the tape is telling you for sure. So let's get some final comments from our guests. Ambrish, we get a lot of queries on Twitter, and one of the queries we got from an investor was that I have invested a lot of money into this market, but what do I do now? I don't have fresh money to invest into. Should I remove whatever I have, or at least take some partial profits in any of the stocks that are still giving me some profits? What would your advice be to them?
Well, I think one should do a bit of churning as far as his portfolio is concerned. I mean, exit the ones where he doesn't really expect performance from those stocks going ahead, and possibly average out some of the better quality stocks which have corrected sharply. So I think there has to be some amount of churning to be done in the portfolio.
Okay. By the way, we have got some more news on monsoon front. Lata just sent us the news that monsoon deficiency is going to be around it's going to be around 82%, the monsoon that is. So that's something that the market is not taking too kindly. 82% of long-term average versus 88% previous forecast. And you know what? The Met Department can now say that look, we had the last laugh. You remember when
I told you so.
I told you so. Initially it was thought that okay, start is good and all, but here we are right now. 82% clearly is a bit of a surprise, negative surprise that is for the market, Sonia.
Oh yes, of course, and that deficiency in monsoons will cause food prices to rise, and it will have a concomitant impact on yield as well in terms of crop outage. But Ambrish, how concerned would you be about the monsoon situation and the impact that it would have?
I've been concerned right from I think end of June, early July. Like I was saying even that time that possibly June was good, but then like going ahead, the forecast is not really up to the mark, and we could face trouble. And because of that, when the markets were closer to about 8,500, I was saying it's possibly time to sell, because even at the ground level, as far as the economy was concerned, nothing much was happening. But still, I think people were like exuberant at that point of time. So I mean, those who got into cash possibly are in fact sitting quite pretty now, and this is possibly the time to invest. But those who are possibly on the other side of the table, I mean, fully invested at 85, 8600 levels, could be the ones who are actually panicking in the market at this point of time.
Okay, Sudarshan, any 4 or 5 stocks that you would recommend long-term investors to keep handy, in terms of their shopping basket, where there's a bit of a discount sale going on and they might get even more discount, and they should go ahead and buy regardless of the further mark-to-market that they may have to suffer?
No, there are 4 and 5 stocks, but they are not the kind that give us glamour. See, you should be buying HDFC Bank no matter what the price is. It should be part of your portfolio. I would add ICICI Bank to it and State Bank. So in spite of the big carnage we have seen in banks, these 3 banks should be bought regardless of Nifty and Bank Nifty levels. They should be part of your portfolio or as part of an SIP. And I would add TCS, which is giving us a very attractive chart pattern for the future in it, and Sun Pharma. So these stocks they are all weather stocks at the current market, and they should be bought into.
Okay, I apologize if you've discussed this stock already before, Sudarshan, but what do you do with a stock like Yes Bank now?
I would step aside and do nothing. Sonia, my sense is this market is going down lower. So there's no rush into buy. The only buying should be done in the names that I discussed, that this type of names where investors can say whether it goes down or up, I want to hold this and I'll buy it at a lower price if it goes lower. Yes Bank doesn't qualify for that. The charts are not, apart from today's gains, the charts are not very conducive.
Amrish, you spoke about HDFC and Kotak Mahindra Bank. How do you approach a stock like Yes Bank?
Yes Bank, I would put that in the same basket as ICICI Bank. Again, looking at the sort of controversies which are floating around as far as this bank is concerned, I would possibly stay out, especially when you have a lot of other private sector banks available at decent discounting. Why get into a stock or a company where you know that there are some issues?
Okay, just one more word on the market action today. The overall cash market volume was 11,700 crore. F&O volume was 1.67 lakh crores. So this fall has come on extremely low volumes. Amrish, the big question then, is this a bear market or is this just a bull market correction? What would be your answer?
No, this is a bull market correction. Although you people have branded me as a bear for a long time, still I would be quite bullish, and I think this is a bull market correction. Could continue for a while longer, could be a bit painful, but then surely this is an opportunity to buy for those who have missed out in the last 12 to 14 months. And I think even the sort of volumes which have come down, I think clearly because people who have possibly bought also in the past couple of days would be sitting on losses of 20-25%. So it's not that people don't have cash or liquidity, it is just that they're not deploying it at this point of time, looking at the sort of blood on the street.
Okay, Amrish, we don't brand anyone bull or bear. If it's at the end of the day.
Anecdotal evidence that we work with, right?
Yes, we do. But Sudarshan, the same question to you, because we keep getting this question. At what point do you say that okay, this is still a bull market correction, and at what point do you say that okay, maybe we have entered a bit of a bear market?
No, the point at which we'll say maybe we entered a bear market will be too late. If the Nifty doesn't hold 6,800, clearly something is going wrong, very wrong, and it's no longer a bull market correction. But even now, let's say that 5% doubts have started coming up, because the bull market theme is very crowded. Everyone, including me, thinks this is a bull market correction. That's very worrying.
Okay, that point is taken. So Mayuresh, I'll spare you that question, but I'll also ask you, what one should be doing with some of these pockets which have corrected deeply. So, for example, the metal space. I know that this is a theme which everyone has stayed away from, but for the slightly longer term investors, say with a 3 to 5 year horizon, are there any opportunities in some of these beaten down sectors?
So clearly, Sonia, I think there will be better entry points in my opinion, and clearly with the commodity down cycle that one is really witnessing, you're not really sure on two counts. A, how the demand will crop up back again, considering the situation that we are probably seeing in China in terms of demand-supply dynamics, the LME inventory, the realizations across ferrous, non-ferrous metals which have actually fallen down to low levels if you compare that on a year-on-year basis. And clearly, I think even with the fall in raw material prices, for a lot of these metal converters, I think the offset probably happens with fall in realization as well. So clearly one needs to actually look at results coming through over the next couple of quarters and then take a call. But it's too early. I think I'll not be jumping into metal counters just because they've become weak or the prices have corrected significantly.
All right, gentlemen, thanks for joining us. On that note, we'll actually have to take a short break, but thank you for sparing time. It has been a weak day of trade, no two ways about that. Not once in the day did we see any kind of intraday recovery, and the markets just moved in one direction, and that was lower. So Sensex goes home with a loss of more than 300 points, and as we were pointing out, the Met forecast that the monsoons by the end of the season will be much worse than what was earlier forecasted. That actually came as a bit of a blow in the late hour of trade. But on that note, we'll take a break. When we come back, more money market action. Stay tuned.